All right, folks, we'll get started in about a minute or two, and welcome to Stock Analysis Friday. So just hang tight and we'll get going real soon. All right, well, welcome everybody to Stock Analysis Friday. Great to have you here. Today is the 9th of December, and super to be once again in front of you all. All right, so now go ahead and start now typing in the symbols you want me to look at. They can be stocks or ETFs, and just go ahead and do that in capitals. And while you're doing that, I'm going to just run through some of the administrational items I have to go through, like the famous risk disclaimer for stocks. I think we probably know that there are risks in trading or even investing in the financial markets. And we, of course, have to remind you of that. And it is possible to lose some or all your money trading the markets. And that's why you need to always trade with risk capital. Check with your financial advisor or money manager to be sure any of the trade recommendations we suggest here today or any of the ideas are suitable for you. We don't know your personal situation, and of course they do. And then finally, we want you to use risk control. It's really important to do that. And in order to use risk control, you have to have a risk control program. And so here we come to the rescue. Okay, we got a brand new book called Money Management for Traders. And it's a great read, and it's a kind of not a very long book, but it's a very powerful book. It's very concise. It has everything you need in there to start implementing a good, solid risk control program for your trading or investing. And the ideas in here is we're going to teach you how to calculate your position size, also known as the trade size in the industry, for every trade. And then your risk to reward is also taken care of in the calculations there as well. So definitely check out that book. We talk about market risk. We talk about trade risk. Also, too, I've got a brand new book coming out next year called The Art of Trading. I think they're targeting that for spring to early summer. And this is a second edition of our very popular book called The Art of Trading, obviously, back in 2008. So we're due for an upgrade on that. And that new book's going to have a lot about the new software we've come out with since 2008. That would be the OWL, PTF, TLM, and ERI. And you'll be able to see me use that on charts in just a moment. So definitely check that out. You can pre-order that now. Now, we're going to be using a suite of software tools when we look at the market. And today we're going to be using our charting software. So that's really the top row here. That's the applied reality trading software called ART. Then we have the OWL, the PTF, and TLM. Those are indicators along with the ERI at the bottom. And they all measure different things. And I'll cover that when we actually go over markets today. The second row down here is all our scanners. And we probably won't use those today. You'll see them on the charts, but most everybody will be typing in symbols, so we'll be looking at that. And then our bottom row is our risk control software. And we won't be using that today as well because, again, this is just a look-see where markets are going and so forth. But if you're actually trading, you're going to want to use those tools at the bottom as well, because that's how you handle your risk control. So we call this the ultimate trading system because it kind of covers all the bases. We search, we enter, exit, and we apply risk control. So there you have it. All right. So now, in order for this channel to get as many people here as we want, please tell your friends about it, or anybody interested in investing or trading in the markets. Have them bring a few stocks every week. We'll check them out. if your broker gives you a call and says, hey, buy Apple, we'll check it out for you here and tell you if we think it's a good time to buy it or not. It's very powerful when a company has great fundamentals and the technicals align. Okay. A lot of times the company will be fundamentally pretty good, but it's in a downtrend because the market's selling off. So you want to wait and get a better price, right? So definitely keep that in mind. All right. So, and like us and subscribe us, okay, to us as well, because that always helps the channel for whatever reason. Okay. All right. So thank you for attending. I would appreciate everybody being here. The format today, again, we're going to look up symbols. I got a couple I'm going to start out with, but feel free to start typing yours in now. And what we'll do is if we have time left over at the end, we usually look at the intraday markets on a very short time frame. So we'll try to get to that too. All right, well, let's dive in and just take a look at the charting platform here. So one of the things I want to go over before we get going is up here are the scanners running. Okay, so we're not going to be really using those, but you'll see them up here running in the background. On the bottom here is we have chart 1, chart 2, and chart 3. So we're looking at 3 charts. And notice here I've got the ETF GLD, which is gold. All right. And by the way, we're recommending gold these days as a buy. It initiated a buy. We waited a long time for it, but it's finally initiating. We'll go over that in a minute. But notice we have 3 charts of the same symbol. And the reason we do this is called multiple time frame analysis. It helps us time the entries. So on the far left-hand chart, this is a 60-minute chart. So each price bar here is just an hour in duration. So why do we look at this chart? This gives us the short-term view of what's going on with the market we're analyzing. The next chart in the center is the daily chart. Now we call this the intermediate view. And each price bar here represents a full day. That's why it's called a daily chart. And from here, we kind of get a good look at the overall entries and exits that we want to take based on the daily chart. Now, the daily chart is a fairly common chart that most people use. So we kind of use that as our primary chart for calculating risk control and also risk to reward. And then the chart on the far right is our weekly chart. And this gives us the long-term look at the market where each price bar represents a full week of activity. So between the 3 charts, we've got the short-term, the intermediate, and the long-term aspect of the market we're looking at in sync. Now, in addition, you'll see some things that you may not see on your chart. For example, you see these pyramids here, these little triangular shapes up and down. Well, that's part of the ART software working. And what that's doing is it's looking at patterns in the market for high probability trends while taking into account momentum. So that is how we enter our market. We'll enter usually 1 tick over and set our stop 1 tick under. Now, the indicators at the bottom, this is called the OWL, and that stands for Optimum Wave Locator. I used to be a naval officer, so everything was acronyms back there. So I guess I carried that thought process over to my trading. And so the Optimum Wave Locator, okay, basically measures momentum. We use it to count Elliott waves at time. But we also use it as a confirmation. So if we're getting a bullish signal on the pyramid, we want to make sure the OWL is also bullish above the 0 line. The next indicator below that is the PTF, Precision Trend Filter. And this basically has 3 colors, red, yellow, and green. Yellow is neutral, red is bearish, and green is bullish. So I'll explain how that works. The next one is called a TLM for Trendline Master. This can draw trend lines on the chart or just put a ribbon at the bottom or do both. So on this chart for gold, notice I have the actual trend lines turned off, but I have the ribbon on. And then at the bottom here, I've got the ERI, and this is the Emotional Reader Index, and that measures fear and greed in the market. So in orderly markets, that's going to be yellow. When they start getting manic in certain directions, that will change. Okay, so let's dig in here. All right, first thing I want to take a look at, obviously, is gold. So in my analysis of gold here, if we look at the long-term aspect, we had a big run up on this, all right, and then it went into a corrective pattern. So basically, it topped out here in 2020, quite a ways ago, and then it got kind of sloppy, but never went above that high, and eventually now went down to the target zone. So this target zone, these 2 blue lines represent a fib retracement target zone. And what we like is we like prices to get in between 38.2 and 61.8. That's a high probability zone for a retracement. So when they get down there, we then know that the pullback or retracement's close to being over. And so we look for bullishness to come back into the market for a possible long trade out of the fib retracement zone. And then we draw a fib extension using these points here, and it gives us a target zone up here. So this is where we think prices are going. And that area is between 201 and 233. Now, if you're an Elliott wave person, this would be a 3, a 4, and a 5. And of course, if you know Elliott wave, you know there are 5 trends in 5 waves in an Elliott wave trend or in any trend. And notice that the owl helps us spot wave 3 down here. Okay, so we are kind of bullish on this. We kind of like it. Now, we went in early. Okay, you got a pyramid trading point entry here. All right, we actually suggest putting your stop as far down as you can, because what we have found on that first move off the bottom, you usually get a retracement of at least 50%, possibly even more after the first initial breakout. So you don't want to use a pyramid on the wave, the impulsive wave up out of the breakout. So this would be a wave 1, then of course 2, and then 3, and these are the 5 waves inside wave 5 as well. So we like this. We're recommending it. Notice the short-term chart is green on the owl and green on the PTF. So more highs are coming according to the PTF. And notice that the PTF is green on the weekly chart, indicating that the top on gold, all right, there's a high probability, and that's 75% on this indicator here, that we will return and make another high. So it looks like a pretty good situation for a long trade. So this is one we're recommending for today, and I hope that helps quite a few of you out as well. All right, so the other thing quickly to talk about is crypto. I know a lot of people are absolutely disgusted with this whole thing going on, and I get that, believe me, with all the corruption and the exchanges and everything else. But I got to tell you, I think currencies are going to be here to stay. Cryptocurrencies, that is. I think we're kind of like in the beginning of where the dot-coms were in the late 90s to early 2000s, you know, when they sold off and a lot of them went bust. And the same thing with cryptos. I think eventually this market will recover and cryptos will be mainstream in a big way. But I think right now you can't buy it now. It's still heading down. I mean, look at the chart. Everything is fairly bearish. So you don't want to be a buyer when the market is still moving down. They call that catching a falling knife, right? So you don't want to be doing that. But let's keep an eye on it. I wouldn't write it off. But if it turns around and we start getting bullishness back in here, and it may be months, okay? It could be quite a few months. This could be an opportunity of a lifetime to get in at a low price on crypto. So we kind of want to watch that, but this is not a recommendation right now. The other thing I wanted to look at today before we get going is silver. All right, so silver is starting to move up as well. But one of our indicators here on the daily chart is indicating no buy yet. All right, so I have to hold back on this. I'd love to be long, but when this indicator says red, it's saying that this bottom, there's a 75% probability that that is not the bottom. So after this brief correction that we're in, and it's not so brief, but after it went from 16 to 21, so 5 points, not too bad, but it's saying it's going to come back down. So if you're trying to get the overall big trend, you don't want to trade against that. All right, so silver's a no-go right now. And then I want to take a look at USO. Now, USO has kind of been an interesting market here. You would expect, you know, because of all the gas regulation coming this way, that prices would go up. And they did in the beginning. All right, but here's where how powerful retracements are and psychology. So it ran up all the way from 10 to 80. I mean, that's a huge run up. So people start taking profits, and that's what causes markets to sell off. And notice here, all right, we're starting to get into the target zone for this retracement. So we expect a bounce after this, but it hasn't come yet. So this is red. This is red. We've got a red pyramid on the short-term time frame, and you can see there's no active pyramids on the daily chart. So when prices go below a bullish pyramid, that deactivates it. So this is still coming down. And, if you went long here, you got stopped out. So you're going to have to try again. But in any case, USO, we'll see how that goes. Still bullish on the analysis, but not on the entry right now. All right. All right. Now let me get to a couple of you guys or type it in there. Don't worry, I haven't forgotten you. All right. NEM, Newmont Mining. Let's check out that one. That is one we've traded many, many times. All right. I remember trading that years ago. All right. So let me check out this little bad boy. And this is, a gold mining company. So it's not actual gold, but it's the miners. So it's come down quite a bit. We did see on the daily chart, whenever you see this type of consolidation in a breakout, that's usually a good sign that some type of new trend to the upside's emerging. All right. So that's kind of a good sign. The question is this going to be a retracement and then head back down, or are we going to take off and go up there? So first thing to answer that, we need to kind of look at the long-term chart. So let's open that up. What a mess, right? Okay, so it didn't even really resemble gold, except gold had a high in 2011. So that mimicked here. But notice the pullback on the mining company was a lot more severe than gold. So it went all the way down. All right, so, you buying holders that bought in 2000, all right, 6 years later, you would have made no money. Okay, if you just kept holding it. But now it went back up, new high, okay? And now it's coming back down. So now what? Well, that's a pretty hard one to take a look at this particular time. So at least you have no yellow here. So the weekly chart is really not helping me too much, except this owl was the highest here. So, but it was higher here than here. So we could still see some more movement to the downside on this. However, all right, we're definitely getting movement up here. The clarity on this is not that great. I wouldn't personally trade this at all. All right. But if I were to try to trade a retracement, we're already so close to the target zone at this point. And we draw our retracements from wave 2 to wave 3. That to me, it doesn't make any sense. So Stuart, I would stay away from that. Okay. At this particular point, I'm not liking that, but I am liking gold. Okay. And here's AEM, kind of messy in the same way. Okay. I mean, these little short swings like this, if that's your intention just to make money on that, well, the art system did beautifully there. Okay. So that's no problem. But if your intentions are to get on board for something that's really going to take off and go much higher, then this is not the stock for you either. Okay. That's AEM. Gold we looked at. AGI. Take a look at this one. And AGI. Okay, so AGI at least has a green PTF, which is this indicator down here on the weekly. So that's indicating 75% probability. It looks like we'll get above around 12, and we're already at 10. And the better trade with this green PTF would have been early here at 8, and then you would have gotten 12 with a short, with a better risk to reward. So you don't have a risk to reward for a PTF trade anymore in this. And again, it's messy. I mean, look at it. Basing, but it's messy. All right. So, why bother? All right. HL, let's take a look at that. Give that a second to load. And let's see, I don't know what happened with that one. I don't think there is an HL. Okay, not getting that one. Okay, let's take a look at Amazon. And Eleanor, this is for you. Okay, so here, let's take a look here. Okay, so I'm going to open up the weekly chart. All right, for you Elliott Wave people, this is an absolutely beautiful chart. So notice the consolidation for years and years back then. Then we had a nice breakout. And guess what? That was wave 3, right? Now, the nice thing about wave 3 is they're pretty hard to miss in terms of looking at the slope and how much it moves and the momentum it creates during the move. So though, after a 3, you get profit-taking corrections, and that's called a wave 4, all right? And usually a wave 4 is represented in an ABC type of pattern, okay? So we're pretty good here, maybe an A, B, and still C unfolding here. So we no longer have a red PTF. So here's kind of the usefulness of this PTF is that if you were thinking here that this was a bottom and wanted to go long, the PTF was red then. So that kept you from going long at the wrong time. And instead, you got to wait for this to go neutral if you want to go for a long trade. So that's exactly what happened. It went up pretty quickly, but then it headed back down, took out the bottom, and all those people that went long here, all right, if they were active traders, would have been stopped out at the bottom. Okay, if they're not, then they'd be waiting for this thing to return. So it should return, okay, at some point. We're kind of down in this area here. We're starting to see bullish divergence in the owl here. So that means that the market's making lows, the momentum creating those lows is not as high. So that's usually a bullish sign that that move down is becoming a little bit more weak, I guess we should say. All right, so now let's take a look at the short-term charts to see if it's going to go down further or we may have a bottom. Well, right away, my eyes go to the PTF right here and the active pyramid still here to the downside and the red owls. So it's still coming down. So I think we haven't seen the last of the lows on this correction yet, Eleanor. So I would not buy yet. All right. And this is exactly why, in order to do this business correctly, you have to have the right trading tools. So definitely take a visit to our website and pick these up, or you can go to appliedrealitytrading.com as well. Okay. So there you have it. All right. So that's a good one to look at. And I think this will be a great long trade at some point, but we just got to wait a little longer. Okay. So great. Thank you for sharing that. Let's take a look at Home Depot and see what's going on with that one. All right. So Home Depot, I'm going to open up the weekly chart. Look at this big move up again, a wave 3. All right. 3. And let me just get rid of this little. We were kind of seeing if we were going to go in a major 3 with this or not. So let's remove that. Now, let's see where the target's going to be for this. So let's go back in enough history. We had a move up, move down. So I'm thinking right about here is 2, 3. So let's go ahead and draw those fib retracements in from right about here all the way up here. So very interesting. Okay, very interesting. So here's my feeling on this. Okay, we barely touched the upper limits of the target zone on Home Depot. So I don't really see any ABC pattern. This is just a straight dive down. So this is mimicking the Dow Jones Industrial Average almost exactly. Okay, that's kind of what happened here. So I'm thinking here we're still in the correction. I mean, we could go up a little further, but I think it's got to come back down. And we're going to look at the lower time frame charts to see if my analysis here is correct. Now, we do have a green PTF. We did hit here. So from a technical standpoint, all right, we could be in wave 5 already, okay? But there's some things I don't like about it. And one is I don't see an ABC correction on this leg down. So we may be in a complex correction that's going to result in that, and then it moves back up. So that's the problem with this. And it's very similar to the Dow right now. Let's go down and take a look here. All right, so we've got a nice spring off the bottom, which we see in the weekly chart, but here it is amplified on the daily chart because there's more price bars in a given period of time on a shorter time frame, like a daily chart, than a longer time frame, like a weekly chart. So you see more movement, more patterns inside the weekly chart. So here we got a bullish run here. All right, we've breaking out here. It looks like 1976, and yes, we did break out. So we're above that. That's a good sign. The question is, how much higher are we going to go? Now we do have a red PTF on the 60-minute chart at this point, so we're probably going to see a little pullback. So here's how I would play this. All right, assuming that this may be a significant bottom, let's let this thing pull back because the 60-minute chart says it's going to do that. Let's let it pull back and see if this bottom holds. And then you can take the long trade after that. So this one's a little bit more interesting, but you know, it definitely from a technical standpoint, using the tools, it could trigger a buy signal. All right, so that is that. All right, Kevin. All right, how are you? So let's see, HRB. And let's see, HRB. Okay, moving up. Now, here's a big problem a lot of folks come into with trading stocks. By the time they usually use some type of news service, and by the time the news service says to buy, the stock is already taken off. Okay, so it's way up here. All right, that's probably one of the worst places you can buy a stock, because at that particular point, there's profit taking going on, possibly right around the corner, if not already. So we have a situation here where we do have a move down, move up. We still got green here and green. So this thing could recover and make one more high. But wouldn't it have made sense to get in down here? Okay, versus trying to, well, are we going to get another high or not? It's kind of Russian roulette when you get up here. Okay, so try not to chase markets after they're premature. Okay, all right, let's see about the lower time frames. Okay, so here's this move up amplified. All right, so let's take a look at this and see if this has corrected a normal amount of space. Let's open this up and bring this up. So the bottom of this movement up was from here, right? Here all the way to here. So this was the low, never went below that. So that's the start of the trend. So we had that first move up, pull back. This is the second lowest point. So that's a wave 2. So let's go ahead and draw our fibs from here all the way up here. All right. So it really has not hit the high probability target zone. Now the PTF is saying eventually wave 3 will be taken out because it's green. But the PTF does not tell us when or how big the retracement is going to be before it returns. That's not the job of the PTF. The job of the PTF is just to say that more highs are going. And in this case, you got to wait for the correction to unwind first. So that will give you confidence after you get into the target zone to take it again, because this, will be green at that point. Now, here's the deal. All right. See the red area here? It hit that. 15% of the time, wave 4s only go there. 70% of the time, the way we draw them in between waves 2 and 3, they go here. And then 15% of the time, they go lower, but can't go into wave 1. All right. So that's kind of important. So at that particular point here, I would say I probably would not take this, but on this situation, because I only like to trade trades when they sell off into the high probability area. Okay, but that's just me. All right, and notice a little bit of red here, but still, I kind of not going to take that until we get down into that lower target zone. So that's my feeling on that too. Okay, now let's see. HRB, thank you for sharing that one. That was for Kevin. And MRVL, Marvel. Okay, so let's take a look at that one. Give that a second to load on all time frames. Okay, let's open up that weekly chart first. All right, so this is kind of interesting. All right, so move up, move down. Where'd the trend start? Right about here, right? First move up, move down, and this lower looks lower, so this has got to be the 2 here. Okay, so let's draw that in. And notice we've exceeded that particular retracement area. So it's hit the target zone, has not gone into wave 1 territory. So that's pretty good. Okay. Let me just see what we've got cooking here. All right. I think a little bit more of a possible A, B, C, wave 3, 4, moving up, not quite green yet, but getting close with the green PTF. Okay, so at the very least, the PTF here is saying that there's a 75% probability we're going to get back above 95 after this correction. The main thing we got to worry about now is the correction over? For fun, let's draw some fib extensions in. all right, and see where we may have see if the fib extension line is higher than the PTF. And it's pretty much matching it. So this would be, in terms of Elliott wave, a 3, a 4, and a 5 wave 5 target zone. Here's our PTF smack in the target zone. So I think that's a pretty good bet. We're heading there. Now we just got to see if the correction is over. So now this is where we need to go down here. All right, well, this is starting to look a little better down here. So we have a green pyramid, red, okay? Here's what I would do. This is close, but not quite. Green PTFs on all 3 time frames. All right, this is one of the best opportunities I've seen yet today, all right? But again, it's not an immediate buy because I have to wait for this thing to turn green, and it could today, all right? It's starting to move up. So let's take another look at that before the session ends, and remind me to do that, because that may even be green by the time we exit today's webinar, okay? And if so, I'm going to put that on a buy list. All right, so that's MRVL. Looks like a good one. All right, Stuart wants to take a look at NVIDIA. Let's take a look at that. All right, so here's NVIDIA here. Okay, so we looked at this last week, and notice once again, we had a beautiful Elliott wave 3. We drew in the fib retracements, okay, 4. Did not reach into wave 1, okay? Here's wave 1, so it didn't go there. So it's a valid 4. And here's the 5 target zone. And we're getting very close to going green, even on the weekly long-term owl. All right. By the way, on a wave 4, you have to have a red owl, okay? That's one of the requirements for a wave 4 to be complete. So it's had that. Now, if it goes green, then we're in the wave 5. So the target from a fib level is 301 to 422. You can see that here, okay? But check out the PTF. All right, it's putting it up near around 358, okay? So that's a nice trade. And notice the risk to reward. If you get in, let's just say you got in now, you're pretty good to that target zone, okay? So that's a good risk to reward on that of 2 to 1. So I'm liking this, and I guess I would, yeah, this is a go, okay? NVIDIA is a go, okay? So this is a watch list for MRVL, but NVDA, NVIDIA, is a go, okay? So that's the winner so far today. So that is one I would recommend getting in. Now, you have to figure out how big your account is and if you can afford to put your stop at the very bottom. Here is what you got to be careful about. Okay, so we had that big move off the bottom, right? If you'd gotten in earlier, right around here, you could have had a easier time putting your stop down here with the lower account. Now it's way up here. So where do you put your stop? You have to be careful of the retracement after the big move up. A stop at the bottom kind of ensures that any type of significant pullback, you'll be okay. Now, if the bottom's not in, you won't be okay. You'll get stopped out. But if it's a significant pullback, a stop at the bottom is going to save you. So if you can't afford to do that, draw your fibs into where current prices are and try to put them below the fib retracement, because that's an inflection point for any type of normal pullback. Now, if you use this price bar sitting right here, that's pretty good because that stopped the downtrend cold before. So that's a significant price level. So maybe using that price bar makes sense, okay? So NVIDIA I like, and I recommend putting the stop down here on that trade, okay? Good one. And that is Stuart. Thank you, Stuart, for that. All right, he's got another one, U. All right, let's take a look at U here. All right, so U, not much history, all right, had a high of over 200, almost 220. Now we're sitting at 34.45. Okay, great short. Okay, Art would have had you nicely short on that. But that high triggered a green PTF at that particular point. So this thing should return and go higher, but the short-term time frames have red PTF. So looks like the bottom's not in yet. So that's a no-go. Okay, no-go on that one. All right, let me see. Did I miss anybody? Let me see if there's okay, are there any more? I think I got everybody. I'll hang tight here for just a minute just to see if anything else comes in. Now, what we do is we post this session in our recordings area on YouTube, so you can actually access that. And we put a timeline on it in YouTube. So in other words, if there was a particular stock you want to just jump to, so you don't have to kind of figure out where it is in the timeline, we'll put that in there for you. And it usually takes us a few hours. So by the end of the day, we'll have the timeline up there. All right, so that's kind of how we work that. All right, anything else? All right, let me take a look at some of the intraday time frames real quick. Now, as you know, we run a day trading room and we trade futures for the most part. But again, we use the multiple time frame analysis to do that. But the time frames are different because these are intraday time frames. So we use, believe it or not, a 15-second time frame for our short-term aspect, 1 minute for the intermediate, and a whopping 5 minutes for the long term. Okay. Now you can use different time frames if you're a day trader, but you know, our day trading room, we're there for a couple hours, so we kind of like to be active and we have an edge. So we like to exploit that edge as often as possible. All right, so this is the micro MCL January 23 futures contract on very short time frames, and it's messy. The only potential here may be, all right, once this moves down, because the 15 seconds says it's still moving down, once this moves down, we may have a scalp trade based on a green PTF if that holds. Then we put our stop, need to figure out where to put our stop. So no long trade here. I would not short trade this, but we'll check back on it at a certain particular time. Let's just take a look real quick at the MES and see what that's doing. All right, so that had a move off its bottom, big move down, move off its bottom. All right, boy, a lot of volatility there today, okay? So we've got a red PTF. So I would probably be thinking of shorting this at some point, okay? Let's see, MNQ, see if that's any different for today. Same type of thing. Okay, so the other market too is gold. Gold, you got to be a little bit careful because the liquidity dries up about after 9 a.m. Pacific time. Look at the move on the 15-second. What a beautiful trade, okay? So that was a nice one, and notice how the PTF turned right around during the trend. So that would have been the best trade for the day. If you love this kind of stuff, check out our day trading room. We have a blast in there. Okay, so let's go back because Eleanor wants to take a look at DQ. Let's take a look at that one. Give that a second to load. Let's open up that weekly chart first on this one. Okay, so once again, wave 3. Pretty hard to miss them, right? 3. Now, is this a 4? Did we go below the possible wave 1? Because that's a pretty deep 4 right there. Let's see if we can figure that out. And there are ramifications on the wave count if we did. All right, so I think probably right around here looks like 2. So pretty far down. Did not go below into wave 1. All right, so that's kind of interesting because if it did, then that means this would be a 1 instead of a 3. Any case, let's say whether it's a 3 or a 1, and if this is a 2 bottom or a wave 4 bottom, both of those bottoms result in the next move being bullish, okay? PTF is green, okay? So we've got a top above around 135 on that, right? Okay, and look, we're pretty good here in getting in fairly close to the bottom. So the risk to reward is pretty high here. Let's take a look at the shorter term charts and see. Okay, so a little bit of red still on these. So we can't go long yet. So we got to wait for these charts to turn bullish and be sure that this bottom holds. So it's still coming down. We got an active pyramid. We got a red owl. We don't have a red PTF anymore on the 60-minute, but we do have a red owl. So, you know, this bottom, we gotta really take a look at that and make sure that holds. And so, you know, here's your first move up. Remember I said after the first move up, you usually get a dramatic move down. That's what we're seeing. which is a good sign, because if this holds and we get a turnaround and this turns green, pull the trigger. Okay. All right. DQ goes on a watch list because I think that's going to be pretty good pretty soon if the bottom holds. So I'm kind of liking that. All right. Anything else? Thank you, Ellen, for sharing that. Okay. All right. Well, I think that's it. Okay. So I think what I'm going to do is put these on let's put it on gold, and I'll just put some music on as we end the session here today. And we'll see what happens with this. Now, if this moves down, okay, and can get into this area here, and this remains green, I'd like to see this red, okay, and then another move up. So what I'm looking for now is a pullback in gold, possibly, all right, and then another resurgence forward. All right, so we've got a red here. That's a good sign. So let's see what happens with that. Now, it is possible because you're still technically, according to this, still in wave 3. So you could still pop up and make one more high before it goes into wave 4. But if this turns red, then we're in wave 4. Now, again, okay, I'm not going to chase this market. I wouldn't go in here. Okay, it's just too risky because you may even get one more slight high, but there's a bigger risk of a more significant move to the downside. So that doesn't make sense to take a long trade here. So let's go ahead and take a look and see based on that. Whoops, wrong line. Let me grab the fib retracements. And it's a little early to draw those in, but I'm going to do it anyway. And if I have to erase them, I will. But if this goes red, then that's kind of where that's heading. So even if we make one more high here, okay, then I'd redraw the retracements and wait again for the sell-off. So my situation here would be buy when it gets down to the retracement, wherever that may be, okay, and whenever that would be, because then I would go ahead and trade the wave 5 back to the upside. All right, so that is it. I'm just going to leave it here. Let's see how this thing unfolds. Again, this is gold. All right, so kind of fun to check out a commodity here a little bit and see how that runs. And again, this is the futures market. All right, listen, thank you everybody for coming today. We'll be back next Friday, and good job on the stocks. So the one we like today is NVIDIA, NVDA. We're going to put MRVL on a watch list along with DQ. And I wouldn't be surprised if those turn out. Let me just quickly go, because remember I said I wanted to take a look at MRVL before I sign off today. So let's just take a look at that and see if the 60-minute chart on this has gone bullish, because if so, ooh, not quite, okay? Very close, but it's still red. This could be a buy by the end of the day or in the next couple minutes, okay? So that's kind of something we want to keep an eye on. So if you see pushes to more highs here, chances are that will turn green, all right? So, there you have that, okay? And then we'll put this back on here. All right, so that's it for now. Thanks so much, everybody, and we'll see you back here next week. I'll put a little music on, and we'll probably keep the room open, I don't know, 5 minutes or so before we end. Have a great weekend, and thanks for being here. Stuart, just to answer your question, the stop on Marble, if you can afford to do it, should be at the bottom or at the very least here. All right. So either one of those areas there. Okay. So you can take a look at your chart. I will bring up the data window real quickly here. So the bottom that would be best is 35.30. That's about 7.25 points away from the current prices. The next possibility, if that's too far away for your account size, would be 36.70, one tick under those, okay? So that's where I would put those. All right. No worries, my friend. All right, have a good one. I'll go back and put this on gold again. It looks like it's making another high here. So what we'll have to do is redraw these fibs if this thing breaks out. So notice here, you don't want to go short with this thing still green, because this is what can happen. You've already had 1, 2, 3. This will be the fourth pyramid if it's confirmed when prices get above there. So we'll kind of keep an eye on this. This probably will turn yellow once it makes a new high, and it just did. All right, so we'll move that over and keep moving up until this thing decides to end wave 3. Okay, that's kind of how you'd want to do it. So again, I'm looking for a move down. Now, if this thing gets accelerated up here and there's enough profit to go to the short side, you can do that. Right now, there's really not. Okay, instead, I want to wait until this thing sells off into the target zone. And as long as the PTF in the situation remains good, I'll take it. Now, this is interesting. The PTF now on the 1 minute turned yellow. Okay, so that's an indication probably we're coming to the end of wave 3. All right, so we'll see. We'll see how that works out. The 15-second chart is saying it's still probably going to make another high. So short term, I think wave 3 has a little more room to go. Okay, but that's how you can actively, as the market unfolds, make your assessments on what to do. All right, so those of you that like day trading, this is, again, exactly what we do in our day trading room. And when you're watching a lot of different markets, there's opportunities all the time. All right, so again, okay, that's it, and I'll sign off and All right, we're starting to finally see a little bearish divergence building in the owl here. You know, price is up, seeing it on this time frame too, between here and here. Doesn't mean it can't go up again, okay, because you can have bullish divergence for quite some time, but it is showing that you're in the mature part of the trend. Okay, so this is not the best place you want to get in, obviously, for a long trade. So we're getting another pyramid forming where my arrow is here. That will turn a solid green if prices get above it. And of course, if you were able to get in the trend earlier, you know, you trail your stops on these pyramids. That's how that works. So it'll be interesting to see how this one turns out. All right, a couple things now as it's starting to unfold here. Notice we got now two blue colored pyramids, one pointing up, one pointing down. That's indicating a bracketed market. If the market moves down, this one pointing down will turn red and this one pointing up will disappear. All right, because that will be the active pyramid to the downside. It'll be a minor pyramid too. Notice we have a red owl now over here, so we're getting a little bit of negative momentum in here, but until this has got to turn red here. Okay, so that prices went down below that one, so that did turn an MP. That's basically telling us that we have some type of correction unfolding, possibly, and that's what that's doing. So it's also used for a scaling out point. If you wanted to scale out some contracts, you could do that at that point. Again, the target for the big move down is down here. This has got to go red for us to really say with any confidence that we are in that big move down. Can't really take a short trade here because this is so bullish. So I think the real trade is waiting for prices to see if they get here and then take the long trade. This is where patience and discipline come in, where you have to wait for the right trade setup based on your style of trading. And of course, you want to test that to make sure you have an edge and then use it if you do. All right, so let's see how this unfolds. I doubt it'll be a straight dive down. It'll probably be at least an ABC correction, and then we'll see if it goes into a complex correction, but it is heading down at this particular point. One more thing to point out, the stop for the long position, if you were gotten in early, is right here, right under this level here, which is the below the base leg or flat part of the triangle, marking the fractal pattern. So this is a key level of support there. So if prices go down here, you'd exit your long position at that point if your desire was to take profit out of this impulsive move. But you will get another impulsive move here, okay, once the correction's over. So you'll have to get back in. You know, we could still rebound and head back and make one more high. That's possible. But as this gets closer and closer to going red, the probabilities increase that we could be in the major wave 4, and prices should eventually get down into the target zone. But I've seen things rebound. I've seen prices rebound. As long as this isn't red, anything can happen. Also, rarely do you have a green PTF on a major wave 4 bearish correction. So this has probably got to go to red, or it's indicating maybe one more move to the upside before the major wave 4. We'll see. So it's amazing on a 1 minute time frame how long you have to sometimes wait for the setup, right? This is why, here's our game plan on the micro gold contract. But, then you go on to another market like maybe the MES or the MNQ, and you create your game plan for that. And then whichever one triggers first, you're good to go. So the more markets you follow, the more active you'll be. But I think what's probably an eye-opener to people when they first come and trade in this manner is that you think a 1 minute time frame is so freaking fast that it's the wild, wild west, so to speak. But it's really not, because when you have structure and a game plan, it's very disciplined. And that's kind of a key element in trading the markets. You have to be disciplined and wait for the setup. So even trading a 1 minute time frame, it's not as hectic as you think. Now, when it's time to pull the trigger, we have to calculate trade size. We have to calculate risk to reward and all sorts of things. So then it becomes you have to be quick on that, but that's not hard to do with the risk to reward calculator. So, I'm just going to keep the room open a little bit longer and see what happens with this. It's starting to come down. I want that PTF to turn red on the 15-second, and then I want the owl histogram on the 1 minute chart in the middle to turn red. And then we have a pretty good chance that we're in that wave 4. So let's just see how this thing unfolds. Okay, so now we do have a red owl, first one. Okay, so now we just got to get this thing to turn red here. Had another MP form here. So we may have getting ready for a B wave and then a C. So we could have a situation like this unfold, and this would be 4 down here. Or this may be A already, and this B, and then C take us down and do an Elliott wave 4 correction into the target zone here. All right, so we'll have to see what, how the market unfolds to tell us the type of correction it's going to be. I always assume it's going to be an ABC, but you never know for sure until after the fact. But I do know before the fact with some confidence that if this is a wave 4, which it seems like we're in now, that we should hit this target zone. All right, I think I'll end here, guys. All right, we're getting over an hour, so thanks for being on board, and we'll see you back here next week, okay? Take care.